Hello guys, welcome to Conceptnomics. In this video, we will be discussing the questions that appeared from Indian economy in the Prelims 2024. We will discuss the questions, their answers in detail, and also we will see what was the trend this year. So let's begin. The first question from Indian economy was regarding total fertility rate. Even though we cannot say that this question is entirely economic question, it has a tilt towards Indian economy part. So this question, we will see the source. This is a direct question from NCERT. The definition of total fertility rate is given in your NCERTs, and the WHO has defined this term, that is total fertility rate. So the standard definition for total fertility rate is taken from WHO's definition. So we will see what is the answer. Before that, we will quickly see the options. The first one, the number of children born per 1,000 people in the population in a year. Now again, second option, the number of children born to a couple in their lifetime in a given population. The third one, the birth rate minus the death rate. Again, the last one, the average number of live births a woman would have by the end of her childbearing age. Now, the answer for this question is option D, that is the average number of live births a woman would have by the end of her childbearing age. Now, if you see this option, the question is about total fertility rate in an economy. That is, here the question takes into consideration a macro level, whereas to understand this question, let us take micro level. That is, let us consider the case of one single woman. So, when we take the case of one single woman, the total fertility rate of that woman would be in her menstrual age. That is, menstrual age is the time where a woman is fertile to give birth to an offspring. So, in her menstrual age, if she is alive until she completes her the menstrual cycle or till menopause, in that case, how many children does that woman give birth, or how many children this woman gives birth? That is what we call as total fertility rate of that one particular woman. Now the question is about the economy, which is at the macro level. Now when we take it at the macro level, see the option, the average number of live births. That is average. Why do we take average here? Because at the macro level, it is not just one woman, but all the women living in that economy or in that particular group is what is taken, and that's why we take the average. Average number of live births a woman would have by the end of her childbearing age. Childbearing age is simply the age where a woman is fertile to give birth to an offspring. So this is the definition, and this was a very straight question asked from your NCERT. You should be knowing this answer. Now moving on to the second question, that is, in India, non-banking financial companies, that is NBFCs. The question is here about, the first statement is here about NBFCs can access the liquidity adjustment facility window of Reserve Bank of India. Now, as an aspirant, you should be aware of two basic things here. One, what are NBFCs, non-banking financial institutions, and here you must have an idea regarding what can NBFCs do and what NBFCs cannot do. Can and cannot of NBFCs is very important, and this is a basic thing. Like for example, NBFCs cannot issue checks, and all these things are very basic. So do's and don'ts of NBFCs, this is a basic thing. Now second one is LAF or liquidity adjustment facility, which is a very favorite area of UPSC. UPSC tends to ask questions from LAF every year. That is, LAF includes repo, reverse repo, and how these instruments are used during inflation, or what are the features of this liquidity adjustment facility, and we have standing deposit facility now. So all these basic things are very important from UPSC perspective, and the serious aspirants should know all these things. Now coming to the first statement, the question is, or the statement is, NBFCs can access liquidity adjustment facility. Now let's first see what is an LAF or liquidity adjustment facility. Liquidity adjustment facility is an emergency window which the RBI has opened for the commercial banks to access credit, and this facility is available to commercial banks on the basis of a collateral facility, or the banks have to pledge government securities with the RBI in order to avail this facility. So this is how the liquidity adjustment facility works, and banks can access credit from RBI through this facility. Also, banks can deposit excess of their money with the RBI using this liquidity adjustment facility, and the RBI and also the Monetary Policy Committee uses this facility also to control inflation. This is the basic thing, and NBFCs cannot access this liquidity adjustment facilities. It is exclusively for the banks, and with that we are able to eliminate option 1. And if you know that you can eliminate this option, then you easily can eliminate A and C from your options. Now the thing is very simple. From this it's certain that third statement is correct, so we need to know the second one. Anyway, we'll see both the statements. Second one, in India, foreign institutional investors can hold government securities. What are foreign institutional investors? These are investors who invest in the secondary market through stock exchanges. So stock exchange, again secondary market. Now there is no bar for the FIIs or foreign institutional investors to hold government securities or to buy government securities. So this is a correct statement, and third one should be obviously correct, but still we'll see. In India, stock exchanges can offer separate trading platform for debt. Now we know that stock exchanges deal with debt as well as with the equity. Now for the debt part, the stock exchanges can have a separate trading platform, which is also a general statement which can be there. So this is also correct. See, if you see both the statements, the second one and the third one is more of a kind of general statement which by logic you can get it, but the first two statements, if you compare, you will see that you should know the fact. Alright, now again, it is also heard that some experts or maybe some mentors come up by saying that if you see can and all that, it can be correct and all that. It's not like that. See, in these three statements you will see can, but can doesn't mean it's certainly correct. So you should also know some basic facts to answer the question. Next is the third question. In India, which of the following can trade in corporate bonds and government securities? So again, options are insurance companies, pension funds, retail investors. The question is, among these three, who can trade in corporate bonds and government securities? Or simply put, we can say that who can buy and sell government securities as well as corporate bonds. Buy and sell here means buy and then trade it or sell it in the secondary market. Okay, that's what the question means. So insurance companies, pension funds, retail investors, these three options are correct. And this is a very, very basic understanding, a very general understanding that nobody is banned from this. And if you see retail investors, it always comes up in the news that retail investors can buy these securities directly from RBI, which was a current affair also. And again, pension funds and insurance companies, they are financial institutions. So definitely they must be given the access to government securities and corporate bonds. So answer is 1, 2 and 3. Moving on, which of the above is are considered as financial instruments? Now this is a very, very simple question, but I heard from a few students that when they saw this option motor vehicles in the option, they got really confused because motor vehicles, any person know that motor vehicles is a physical asset and it's not a financial asset or it's not a financial instrument. But when UPSC give you such kind of options, at least in the examination hall you get confused. You start overthinking and all that. But don't do that. UPSC can give you such kind of options. Just be cool and trust your instinct and trust your knowledge and trust your hard work and effort. See, exchange traded fund. What is exchange traded fund? That is a collective of equity from different companies. Recently, the government Bharat ETF was in the news also. So, ETF is a financial instrument. It is definitely a financial instrument. Now, the third option, currency swap. It is also again a financial instrument. What happens in a currency swap? Suppose India and another country, Japan, enters into a currency swap, or let's take for example US enters into a currency swap. Indian domestic currency is rupee and US domestic currency is dollar. Swap means you give our domestic currency to the other government or other entity, and the other one gives you their currency or dollar. This is what we call as currency swap. Swapping between currencies of two different economies, or swapping currencies by two different economies. So this is currency swap, and this is definitely a financial instrument. So answer is 1 and 3. Alright, next one. With reference to the sectors of Indian economy, consider the following pairs. Now, we know that there are three sectors, which are the primary, secondary and tertiary sectors. This is again a very basic question. This is a very easy question. This is also an NCERT based question. Like you learned this in 8th standard NCERT. This question only requires a very basic understanding of these sectors to arrive at the answer. So let's see the economic activity and the sector. The first one is storage of agricultural produce. Now see, when you see agriculture, you might have a tendency to mark it as like, primary sector or something. And if the option was given primary, I'm sure many people would have got confused with that. But here storage means this is a service like warehouses, storage spaces or cold storage, such type of things. Like see, all these comes under logistics or supply chain, or maybe these are all services. So this is not secondary sector, but services belongs to tertiary sector. So this option is wrong. Now second one is dairy farm. Dairying or animal rearing, animal husbandry, all these comes under primary sector. So you might get confused whether it is secondary when it is done in large scale and all that. It's not. Dairy farm or dairying simply it falls under the primary sector. So second option is correct. Third is mineral exploration. We know that mineral exploration, mining and all these are under primary sector. Now again here if UPSC would have asked it as secondary sector, again you must have or might have got confused here, at least many of you. Why? Because mineral exploration and all that, you might think that it's industrial or manufacturing sector or something like that. But see what is the definition for primary sector. It is any activity or any economic activity that is directly related to the natural resources. So it falls under primary sector. So this option again it is wrong. As I said, if the option was secondary sector, I am sure many of you would have again got confused with that. Then weaving cloth. Weaving cloth is secondary. Why? Because it's a manufacturing activity. So it's a economic activity that falls under the secondary sector. So we have two options correct and two options wrong. So answer would be only 2. Next one. Consider the following materials and you have to see which of the above can be used as a feedstock for producing sustainable aviation fuel. Now here two words are important. First one is sustainable, another one is can. Now here in this question, the term or this word can opens up a wide possibility in front of you, which means that the question is if there is a probability or if it can be used. So this is a broad term here. And second one is sustainable aviation fuel. So here the word sustainable directly relates to something that is renewable. Renewable plus less harm to environment in terms of pollution or negative externalities. So these two things are important here, which means that from the options You have the freedom to choose any option because it's a broad thing asked. Also, the only thing that you must consider here is whether the option given leads to something renewable or less harm to environment. Agricultural residues, we know that it's renewable or it doesn't harm the environment, or it actually reduces the negative externality, so it must be correct. Corn grain, yes, correct. Wastewater treatment sludge, then wood mill waste, so all of this will come under the right answer, that is all of these can be used for producing sustainable aviation fuel. So answer is C, 1, 2, 3 and 4. Again, this question, very simple question, basic understanding with reference to physical capital in Indian economy. Consider the following pairs. I think UPSC is obsessed with such type of questions. Earlier UPSC had asked a question on social capital, human capital, a question was asked. So different types of capital and what all will fall under the types of capital. All this has become a repeated theme in the prelims examination. So let's see the options. First one, farmer's plow. Farmer's plow, here the option given is it's a working capital. Now you should know what is the difference between a working capital and a fixed capital. Now fixed capital means something that you can use again and again, or it's a capital asset. So fixed capital refers to assets which can be used again and again, which means it has a higher utility. Now working capital mainly includes raw materials or those things which can be used only once, and the utility of such things gets finished or gets over with the production of that material or that final product. So which has less utility, and also mainly it includes raw materials. This is the basic understanding that you should have. Farmer's plow, which means it's an asset or it's something that the farmer can use again and again. Have you ever seen a farmer using his plow for once and then, you know, the utility comes to an end and he demolishes it? No, right? So it's a fixed capital. So this is wrong. Computer. Computer is an asset. We know that it can be used again and again. So it's a fixed capital. Yarn used by a weaver. So what is a yarn? Yarn is a raw material, right? Raw material used in the weaving process. So once the final product is out, the yarn is completely used in the final product and it cannot be used again. So this is a working capital. So this is wrong. Petrol. Petrol is again a working capital. Why? Because its utility reduces with every use, or it is again a raw material, right? So here the only task for a candidate was to identify which are the raw materials and which are fixed assets. So that was the only thing that a student or an aspirant was supposed to do in this question. So easily you can find that yarn and petrol are raw material. So with that you get the answer. So answer is 2 and 4 are the correct options. So we can go for B, only 2. Now this question is not directly from economy, but we will just see the answer for this. Which one of the following words or phrases is most appropriately used to denote an interoperable network of 3D visual worlds that can be accessed simultaneously by millions of users who can exert properly rights over virtual items? Now the options are big data analytics, cryptography, metaverse, virtual matrix. Now when you immediately see the word 3D or visual world, easily you can connect it with metaverse, and metaverse is something very common also. The Facebook also uses this word meta. So you must have seen this somewhere, definitely. Now again, UPSC had previously asked about augmented reality and virtual reality and all these things were in the PYQs as well. So answer is metaverse. Now next question, with reference to the rule or the rules imposed by RBI or Reserve Bank of India while treating foreign banks. This is regarding foreign banks in India. Consider the following statement. There is no minimum capital requirement for wholly owned banking subsidiaries in India. Do you think that RBI will ever allow it, or the statement itself seems to be wrong, right? No minimum capital requirement, which means if you have 500 rupees also you can start a bank. Does it make sense? No. So there should be some minimum capital requirement for opening any bank, whether it is foreign or whether it is Indian bank, right? So when it is foreign, you should also assume that the conditions would be more stringent, or at least compared to Indian banks, it should be higher level of conditions. So no minimum capital, this logically it's wrong. Even if you do not know what is the minimum capital requirement, you can answer this question. Now, second statement, you need to understand the fact to answer this question. For wholly owned banking subsidiaries in India, at least 50% of the board members should be Indian nationals. This is a correct statement, and for this you should know the basics like what are the conditions for a foreign bank to open its branch in India. So answer is only 2. Next is regarding CSR, corporate social responsibility. Consider the following statements. First one, CSR rules specify that expenditures that benefit the company directly or its employees will not be considered as CSR activities. Second statement, CSR rules do not specify minimum spending on CSR activities. Now see, this is again a very simple question. If you just know what is CSR or what is the concept of CSR, you can answer this question. What is CSR? That is corporate social responsibility. See, from the term itself it's clear. That is the responsibility of the corporates towards the society, or the companies or corporates towards the society. Why? This concept has emerged from the basic understanding that the corporates use some of the resources of the society for their growth and well-being, or for their growth and development. So it is their moral responsibility towards the society to give back what they have taken, or give them some facilities, some welfare. Okay, so if you know this basic understanding, you can answer this question. Now see, the first statement says that the corporate social responsibility rules, they specify that expenditures that benefit the company directly or its employees will not be considered as CSR. See, we know that CSR, the purpose of CSR is that the corporates must provide some benefits to the society because they are taking it from the society, right? So, this is not for their own well-being or not for their employees' well-being. It is for the society. So, we know this statement is correct. Alright? So, they cannot use it for their own well-being or for the employees' well-being. It should be given for the society's overall well-being. Second one, they do not specify minimum spending on CSR activities. Now, see, instead of minimum, if it was maximum, then it would have created some confusion for you. Even though it was maximum, it should not be confusing, but still. But minimum, see, do not specify minimum. It should be logically wrong, right? Suppose, for example, a company having a 10,000 crore turnover every year. Assume that there is a company and it has 10,000 crore turnover, which means this is a very huge company. There is also another company which has maybe some 100 crore turnover, or turnover every year. So do you think that both these companies will have to spend the same amount, or this 10,000 crore company can just spend like maybe 5,000 rupees for CSR, or this 100 crore company again the same amount or something like that? So there should be some minimum. Otherwise, this is not logical. Companies spending on their own will and their own likability, that is not practical at all. So there should be some minimum. So this statement is wrong. There is some minimum requirement. Alright. And what is that minimum? 2% of the average net profit made by the company in the last 3 years, and which all companies will fall under this CSR. That also you should be knowing. If you don't know, please check that as well. Moving on, next one. If the United States of America were to default on its debt, holders of the US Treasury bonds will not be able to exercise their claims to receive payment. Second statement, the USA government debt is not backed by any hard assets but only by the faith of the government. Now see, when you read this question, you may feel that this question is complicated, but in fact this question is a very simple question. I'll explain why. See, first statement says that if US government or US central bank or the US government make a default on its debt. Debt means borrowings. The holders of US Treasury bonds will not be able to exercise their claims to receive payment. Now see, we know that bonds are debt instruments, right? And when it is a government issued bond, it is a sovereign, we call it as a sovereign bond. Government issued sovereign bond. Now the statement says that if the USA, that is the government, makes a default, that is not paying back the debt, then the bond holders will not be able to exercise their claims to receive payment. Now, which is the situation where the bond holders can claim their payment or receipts? This is a situation where they have bonds which are backed up by collateral. If you see, let us take a very simple example. There are two people A and B, or two entities A and B. A borrows some money from B, and in case A is not paying this money back to B at maturity, what can B do? B has the option to claim the money from A on the basis of the collateral provided by A to B, right? Now you take a loan from the bank. Let us take a gold loan. So you pledge some gold with the bank, and if you make a default, what will the bank do? Bank has the right to claim their money. They can use the collateral, right? So this is a basic concept. Now read the second one. The US debt is not backed by hard assets, that is collateral, only by the faith of the government. See, the government securities or sovereign bonds are generally backed up by the faith of the government or by the trust of people in the government. And that's why we call it as zero risk securities, because there is no chance of default, because it is the government who gives you guarantee, and it is the trust or faith which gives the guarantee, not any collateral. So this is correct. Alright, so from the second statement we know that the sovereign bonds or any sovereign bond, or mostly the sovereign bonds, works on the basis of faith or trust. So if you take the second statement as correct, and if you apply the second statement on the first one, that is, they are not able to exercise their claims, and that's why there is a default. Yes, they are not able to exercise their claims because there is no collateral backing. It works on the basis of trust. And second one gives you a correct explanation of the first one. When you read both the statements together, you get logic that both these work together. So answer is A. And for answering such type of questions, I would say that you need some basic understanding of economics. That is, what is a government security, how does it work, and all these things should be there. And by simply looking into some videos saying that extreme statements can be wrong or such statements can be correct, such XYZ statements can be wrong or something like that won't work out. You need that basic understanding. You need that basic logic to answer all these questions. Alright. Next one is regarding syndicated lending. Let's first read the statements and then move on to the answer and what is syndicate lending. Syndicate lending spreads the risk of borrower default across multiple lenders. Now, second one, the syndicated loan can be a fixed amount or a lump sum of funds but cannot be a credit line. Now see, we should understand what is syndicated lending. Now, with some logic, you can think like this: syndicate or syndicated lending, which means definitely there is a group of people involved here. There is a syndicate involved. right? Because syndicate is a term which we generally use for a group of people who have a definite purpose or something, who come together for a definite purpose or a particular purpose. Now, syndicated lending in the context of banking means that lenders coming together, that is, few lenders, they come together, and what do? These lenders form a syndicate. They form a syndicate, and this syndicate lends to a borrower. And in case of syndicate lending, the borrower can be a huge corporate, or it can be a government, or it can be an infrastructural project, etc. Generally, the idea is that the amount of loan should be huge, and that's why one single lender is not able to or not willing to lend that money, and that's why there is a syndicate of lenders, few lenders coming together, pooling their money and lending it to the borrower. So this is what happens in a syndicate lending. Now, if this is the case, read the first statement. Syndicate lending spreads the risk of borrower default across multiple lenders. Definitely. Why? Because in syndicate lending, a few lenders or multiple lenders come together and lend the money. So all the lenders will have that risk of default or that risk, right? So it is spread, or the risk is divided among the lenders. So first statement is correct. Now you need to know if the second statement is correct, and also you should know whether it supports the first one. The syndicated loan can be a fixed amount, lump sum of funds, but cannot be a credit line. So you should know what is a credit line. What is a credit line? Like for example, A is a borrower. So A borrows a particular amount of money, maybe let's say for example 5 crore at one particular stage, and let us take A runs an infrastructural project, alright. So at the first stage, he or this project itself borrows 5 crore rupees, and at the second stage maybe another 20 crore, and then the third stage, like that. That is, credit line simply means that the entire amount is not given at one time, it is given at multiple stages or at multiple levels. That is what we call as line of credit or credit line, right? So, do you think that a syndicated loan can be only a fixed amount or lump sum of funds? Since it's a syndicated loan, the amount involved would be definitely very huge, and there is every possibility that it can also be a line of credit or credit line. So this statement is wrong, and if you know that it's wrong, 2 is incorrect. So yeah, so we can directly get the answer, that is C. Statement 1 is correct and second one is incorrect. Now moving on to the last question, that is regarding digital rupee. Digital rupee was one question that we expected in this prelims because of its importance in the current affairs. RBI is launching a digital currency or digital rupee. So what is a digital rupee? As we said, this is launched by RBI. Now it's a sovereign currency issued by the RBI in alignment with its monetary policy. Now, two things are important here. One, RBI and sovereign currency. This will go together because if it's issued by RBI, it would be on behalf of government and it will be a sovereign currency. So these two things will go together. So that is the first thing you should know. Second one is in alignment with the monetary policy. Now we know that it is issued by RBI because it's a basic thing. So digital rupee. Rupee in its digital form. That is digital rupee. So who issues rupee? RBI on behalf of the government. So rupee in its digital form means it should be issued by RBI. And it's in alignment with monetary policy. Whenever RBI issues rupee, it is in alignment with monetary policy. So here the only difference is that rupee is converted into its digital form. So do you think that monetary policy will not be applicable here? No, right? So this is in alignment with the monetary policy. Statement 1 is correct. It appears as a liability on RBI's balance sheet. Now again, you should know what are the assets in RBI's balance sheet and liability in RBI's balance sheet. This is important, and this was also a PYQ. UPSC had asked a similar question regarding assets and liabilities of banks. So, currency in circulation is a liability for RBI. So, this is also correct. It is insured against inflation by its very design. Now, this statement, see, insured against inflation. What does it mean? So, for that, we need to know what happens to rupee during inflation. We know that during inflation, the money supply is high, which means that because the money supply is high, the value of rupee decreases, right? When the value of rupee decreases, this leads to depreciation of rupee. So, during inflation, rupee undergoes depreciation. And as I said in the beginning of this question, digital rupee is nothing but a digital form of rupee. Whatever you can do with rupee, you can do with digital rupee as well. The only difference is that it will not be in the form of currency, but it will be in the form of a digital currency. That's the only difference. So, when rupee is affected by inflation, do you think digital rupee will not be affected by inflation? No, right? So, there is no insurance or such things. This is a common sense. So, this is wrong. It's freely convertible against commercial bank money and cash. See, the digital rupee can be converted into rupee, right? So, for this, the only understanding you needed was that digital rupee is only rupee in its digital form. So, this is again correct. So, answer is 1, 2 and 4. D is the answer. So, with this, we have come to the end of economics questions or Indian economy questions asked in the UPSC Prelims 2024. In the upcoming days, we will also see the other questions. So, all the best to you. I wish you all the best for the results as well. Those who make it this time, prepare well for your mains, and those who couldn't, with the insights that you get from this year's paper, do prepare better for the next year prelims. We'll make it up together. Thank you. Happy learning.